Hey everyone, welcome back. Today I've got quite a few updates. Um, the main thing I want to talk about is why I chose to have 100 stocks in my portfolio. Um, I don't think I've seen that done before, so hopefully this gives you guys something new to see how it turns out. Um, anyway, yeah. First update is I have gotten all my money out of Robinhood at this point. I did leave $50 in it, um, just because I have some dividends still coming in. I think I have, I don't know, it's something stupid like $1.65 coming in dividends still, that I've earned but haven't received yet. And I don't know what the minimum withdrawal is. They don't really say. Maybe there isn't one, but just to be on the safe side, I did leave $50 in there. And then once I get all my dividends in October, then I'll withdraw the last $50 plus those dividends. Um, so how did I come up with 100 stocks? Well, I started with the Dividend Aristocrats, which, if you don't know, are companies that have paid not only paid a dividend for 25 years, but have also grown that dividend every year for those 25 years, at least 25 years. Many of these have done it for 40, 50, etc. And then I took out one or two of the aristocrats because they were very low yield and the growth was small. Like it was just too small of a growth over a period of time. They weren't growing the dividend fast enough compared to other companies. Um, then I've gotten the most of my other stocks from a mix of sources, financial, market news, people doing just should you buy this stock at this time? And then what I'll do is I'll take those and I'll pull up their like 10Qs and 10Ks and look at their financials, and not that I'm any expert whatsoever at looking at that stuff, but from the knowledge I have, I determine that they're a solid and safe investment. Then I look at their dividend history and um, and their growth on that, because I'm looking for ones that grow their dividend over the years, and have a history of the dividend. Um, I thought that the smallest amount of years of growing dividend that I had in my portfolio was 7 years, but I was actually incorrect. If you look, like Apple's only been paying for 5, or only been growing theirs for 5, um, and that type of stuff. So there are a couple of them in there that don't meet that requirement. But for the most part, they're all dividend growing stocks for longer periods of time. Um, there's just so much info out there on stocks, so many news articles, there's thousands of stocks, thousands of companies out there that you can buy. And I get caught up in that. And I mean, I don't get pulled into like, I'm not going to buy something just because I saw an article on it or a news article or something. But I might, after I go look at it, and be like, yeah, I want that one. Um, so it is really easy for me to find lots of great companies that I want to buy. I could have just kept finding more and more and then picked the ones that were at more of a discount right now, which probably would be smart and logical. But I just want to get those solid companies in my portfolio, the ones that I really wanted, no matter what the current price was. So that's kind of what I went with. Um, but since I am prone to finding new companies and new stocks that I want so badly, and and just toss them in my portfolio. Um, the 100 stock thing really helps out because it limits me to exactly 100. Like I can't add another one to this pie at all. The only way I can add one to the pie is to sell off one company and then add another pie as a slice. And then I could add 100 more companies. And I avoided doing that and chose to go with the 100 even, which will limit me in a couple of ways. One, I cannot add any more companies without selling a company. So that will force me to do my due diligence on any company I plan on adding. Um, and and I have to make sure that it's a company that I want more than something I already own, because I'm gonna have to sell something I own in order to add it. The second way it limits me is I can only have 1% in every company. So all my money is going to go into these until I get a target of 1% of my portfolio, no matter what. I can't adjust them. I can't change them because I have a full portfolio of 100, a full pie. And so with a full pie, I mean, if I only had 50, then I could take some, say I was putting 10% in here, and then all of a sudden I didn't like the price or something happened with the company, and I didn't want to add to the position, but I still want to keep them. I could drop that down to a target of 1%, and then it would be over the target and never purchase it again while it was still purchasing all the others. I can't do that. I don't have that ability with 100 stocks in my pie. So that's a big downfall for someone that wants to sit here and watch their portfolio and manage it. Um, but at the same time, and in the future, I may change my strategy, but that's not going to be anytime soon. Um, for the time being, I wanted to do something a little more unique. And I know that a portfolio, at least most experts say that a portfolio of only 20 to 30 stocks tends to be best. And you get all your diversification that way. And that way you don't have too many losers and that type of stuff in your portfolio. But I wanted to do something unique and spread it out and just have a wide variety of if I can talk, diversification, and see if it works. I mean, we'll see. Maybe this will have way too many losers in it over long run, and it'll just drag down the portfolio. We'll see. I'm going to give it some time. It's going to, months worth of time. At least I'm thinking 6 months worth of time, and we'll see how it goes. And you never know what's going to happen in that 6 months. The stock market could crash. It could just keep, on the bull run it's on. Who knows? Um, Speaking of performance, um, so for like 3 days straight, I had bad days. Like I had way more losers than I did winners in my portfolio. But that's okay. And the last one yesterday, they raised the interest rate. So I think the Fed raised the interest rate. So I think that's what caused a lot of the downturn in the market. Um, but overall, I don't have a lot invested yet. So I'm only down. This says 18.99. If I really figure it out, it's probably around 19 something that I'm actually down. Well, actually, I can tell you right now, 80. So it's actually $20 and what 41 cents, something like that, or 31 cent, 30, yeah, 31 cents. Because I've invested a total of 1,500. If you look at my holdings, yeah, all my holdings have cost me 14.99.81, and I'm at 14.79.69. So I'm actually down a little over $20, but that's not a lot, and I don't have a lot invested yet. I mean, if I had $100,000 sitting here, of course my loss would be much bigger. So while it's a kick in the ego to watch the value of my portfolio go down, I'm kind of hoping that they drop more, just so I can buy them for cheaper and drop my average price that I pay for each one of these. Um, I mean, it's not cool watching your value go down, but at the same time, I know I'll be getting in on these companies, which I do want to own on a cheaper price. So I'm pretty confident in most of the companies. I know I didn't do my due diligence on a lot of them. So I could end up with some big losers in here. But I mean, if you look at my companies, most of these are big names, and the ones that aren't are solid companies. I have pretty good confidence in most of these companies. I've added a couple that don't have a lot of dividend history. They have some dividend history, of course, but not like a lot, like Cisco and Juniper, because I mean we're in the digital age, and I work in the technology industry, and I know that my company, I'm not going to say who that is, but the company I work for is it's doing something right now that is using a lot of Juniper equipment. Um, and so I know that this is Juniper and routers and switches and all that good stuff, all that's going to be pertinent in the future. No matter what direction we go, it's going to get there. So anyway, long story short, I'm dollar cost averaging down. I've got here's what I've done with my deposits so far. If I go to my activity, so that one day, the last video said I was going to deposit 100. I was going to have $110 in buys the next day. Unfortunately, since I set up that $100 deposit, it overwrote my normal everyday $10 deposit. So it only deposited the $100, and I was like, "What the hell?" Because previously, I deposited $100 and it still kept the $10 one right here. But I deposited that $600 on the same day as the $10 already was going through. So I think that's wise. If you deposit this like in the morning of the same day that that deposit's going through, then you can get both of them in. Otherwise, it just overwrites it because you can only have one pending deposit at a time. Um, so the next day I deposited 120 to make up for that $10 I didn't do there, and then the next day I deposited 140 just to bring it to around $1,500 invested, or $1,600 invested. No, $1,500 invested. Um, and then and that was today actually. And then I later in the day, it wasn't later in the day, it was actually about, I want to say 9:30, 10 in the morning. They start trading, M1 starts trading at 9 in the morning. And so I thought I could get an extra $100 deposit in today. And I decided last second, and it didn't go through. The deposit went through. I have the cash in there, but it didn't go through where it could purchase. So tomorrow it will spend this $100 along with my automatic deposit, since there are no other pending deposits. So yeah. Let's see here. What else? Now there was one stock I mentioned previously that I wasn't really sure about having in my portfolio. It's not that it's a bad company. It's a great company. It's a whiskey company, or an alcohol company. They make whiskey, they make Jack Daniels and all that. And that is Brown-Forman, I think they're called. Yeah, Brown-Forman. They have two types of stocks, A and B, even though they're both common stocks. And so one of those common stocks doesn't have voting rights, so it acts as a different kind of stock. But anyway, long story short, when I look up BFB, say on Dividend.com, Brown-Forman, there's this little statement here. It either stopped trading or was acquired or changed ticker symbols. And this is here. And there's another site, I forget which one it is, that also says the same type of thing. Yet it's obviously still being bought. And that is not it. Right there. I mean, it's obviously still doing its thing, still paying a dividend, still all that good stuff. The volume's still being traded over 1.5 million a day. So, anyways, yeah, and over 5 years it's grown. I mean, it's a good company. But it makes me question it, and I don't have a lot of emotional attachment to this company. I mean, I'm not a big drinker of any sorts, and that's beside the point though when I'm buying a company, but whether I use the product or not. But I don't know. There's something about this company I just don't have a lot of attachment to. And then you add stuff like that to it, and it makes me question it, like, should I really have this in my portfolio? So the answer is going to be no. I pulled BFB out, and I am replacing it with a very good company. Oh, by the way, Brown-Forman's yield was only 1.25. I'm replacing it with a stock that pays 2.25. But that's not why I picked that stock. I picked that stock because it's an awesome stock, and that is Caterpillar. Caterpillar has great history. I mean, if you don't know, they make the big machines for construction and all that. Caterpillar is just a wonderful company that I wanted to add originally, and for some reason I missed it. So I'm very glad that I'm adding it now. So tomorrow, this sell will go through. And if you didn't know, I did go in here and I actually clicked on it, and then I told it to sell it all. But I didn't need to do that. What I needed to do was go to edit here and drop the percentage of my portfolio down to 0. on this, and it will automatically sell it at that point and re-put that money in all of your other stocks. So what I did is, actually I didn't even drop to zero. You go in here and you edit and then you remove it. You can literally remove it from your portfolio, from your pie. So what I did is I removed it and then I added cat, and now it'll sell all of these tomorrow and it'll purchase cat. So if I come in here, there's my sell for tomorrow at whatever value it's going to be at when they sell. And then you get down to cat, and most of that money, and plus some, is going into cat to bring it up to the targets. So that's the plan. Let's see, what else? So tracking 100 stocks. Now that was a problem that I was trying to solve, and I was looking for solutions on how to track 100 different stocks. I found something that will work, and it's still a pain in the butt, I guess. I mean, most people won't want to go through 100 stocks daily or weekly to determine what's changed. I don't really have too big of a problem with it. 100 sounds like a lot, but it's really not that much. And it only takes 15, 20 minutes to go through. And I don't have to do it daily if I don't want to. Right now I am, because I'm just starting and I'm all excited and getting us all going. But I think once a week is probably satisfactory for going through these and finding out who's paying a dividend and whatnot. Anyway, what I did find was you can go to Seeking Alpha, bloop, and you can actually, once you create an account, you can set up a portfolio. And your portfolio is over here, and you can put all of your stocks in here. And what you can do is you can come up here and you can go email alerts. And you can turn on email alerts for all of your stocks. And you can even pick like which ones, what kinds. So right now I've got them all turned on because I'm not quite sure which one is the one that tells me they've announced a dividend. I do receive the emails because I've received 5 of them now saying that they've announced dividends. But I'm not sure which one of these it comes from. News is nice because I stay up to date on my stocks, although you get a lot of spam, a lot of noise in email. So what I've done is I've created a folder and have my emails, all the emails from them automatically move to that folder. So I can just go through that folder when I want and see the news of what's going on with all my stocks. So it's actually kind of nice. The one thing I have noticed is when a company announces ex-dividend, it will email you and tell you. But if they don't, or when they announce a dividend, if they don't actually mention the ex-dividend date and they just say, we're paying out this dividend based on shareholders of record on this date, well, that's a record date. That's not an ex-dividend date. So they will just, at least from my experience so far, they'll just put the ex-dividend date the day before. And so like, what was it? I think it was McCormick. Yeah. So McCormick announced they're going to pay a dividend of like 56 cents to all shareholders of date on October 9th. So all Seeking Alpha did was say the ex-dividend date was October 8th. But it's really not. If you go to dividend.com, it shows the ex-dividend date of October 5th. And most of the time, the ex-dividend date is at least a week before the, or at least a few days before the record date. So anyway, long story short, I get notifications in my email now telling me when dividends start, so that's very helpful. Plus, I get all the news that I need about all my stocks automatically, and it's all free straight from that site just by setting it up. So that's awesome. One thing I need to do is go add Caterpillar in there and remove the other one. Anyways, long story short, the other thing I've learned is you see I've earned dividends of 96 cents. I've yet to be paid any at all, obviously. All right, no dividends in here. The other thing that you can do, like I said, is you can click on a company and then you can come in here and it'll show how many dividends you've earned. I showed this in the last video. Only thing is I think that's going to be cumulative and just sit there and constantly build up, which is fine for now. I believe M1's working. They've got enough requests from dividend investors to work on something a little more better for tracking your dividends. In the meantime, though, between the emails I get and being able to come in here and see that I've earned more than I had previously, so I know something paid out, then I can just go look at ex-dividend dates for my companies. And again, there is 100 of them, so you kind of have to go look. But what I've done is in here in my portfolio, in my spreadsheet, I've listed all the months that they normally have ex-dividend dates. Like I've gone through their history of dividends on dividend.com and listed the normal months that they always have an ex-dividend date. There's a couple of exceptions where they're a little odd, but the majority of them are very stable, same months every year. So I've done that. Then next, I'm going to put the last ex-dividend date. So like Chubb's last dividend date is 9/20, so that's part of my earnings. And then I know this one's coming up on 10/9 for General Mills. Um, excuse me. So I'm going to track that ex-dividend date in here as soon as I know that they've announced it or get it. And then I'll just post it in here. Boom. That way I know they've paid a dividend, or at least they're planning on paying a dividend. And I know all my companies are doing what they should be doing and paying me. And then once I actually get paid, I'm going to put that date in there. And that is the pay date. And I could look up the pay dates and put them in here ahead of time, but I don't want to do that. I'm only going to put the date in here when I get the money in my account. So that way I know the last time they actually paid a dividend. So next time I come over here and say I go through my stocks real fast, I can see ABT. Oh, last time it paid a dividend is supposed to have a ex-dividend date of the 7th, but it's already August. They haven't paid a dividend. What the hell? Then I can go investigate and see what happened. Did they not announce a dividend? Did they drop their dividend? What happened? I can see that. So yeah, the last paid basically tells me the last time I got paid from them. So again, I can just kind of track it to make sure that I'm getting paid what I should be getting paid. Speaking of getting paid what you should be getting paid, here I've also learned that when you receive dividends from M1, then they round up, which makes sense, I guess. But you'll see that with Chubb, I actually earned 0.0173 cents in dividends based on my partial shares of the company. And I'm receiving 2 cents. On DI, I earned 0.0816, right? So if it rounded down, I'd only get 8, but it actually rounds up because it's over a penny, or they have to round up to a penny basically. So I'm getting 9 cents. Same here, 0.1161, I'm getting 12 cents, 0.039, I'm getting 4, 0.089, I'm getting 9, et cetera, et cetera. And these are all dividends that add up to that 96 cents or whatever that I've earned so far. Yeah, 96 cents. So yeah. Anyway, that's my updates at this point. Oh no, I'm not done. Funding schedules. I did change this, so I've deposited $1,600 at this point. I can only deposit 55. I can only contribute $5,500 in a year to a Roth IRA. So what I've done is taken that 5,500, subtracted the 1,600 I've already deposited, and it comes to $3,900. I can still deposit for the rest of the year. So what I've done is I divided that. Well, I added up all the weekdays throughout the rest of the year, came to 67 days. Then I subtracted Thanksgiving and Christmas because the market is closed on those days, comes to 65 days. So we have 65 more market days in the year after today. So starting tomorrow, there's 65 more days that the market will be open until December 31st when the year's over. And so what I did is I took that 3,900 divided by 65, and it came to an even $60 a day. So what I did is I changed my contributions, my automatic deposits, from $10 a day to 60, and that will get me to an even $5,500 by the end of the year. So that'll max out my Roth by the end of the year, and that's good because I don't have a lot more money to invest right now. I want to put my entire paychecks into investing. I'll create a taxable account and invest as much as I possibly can, but I currently have some debt that needs paid off. I have a credit card that's almost maxed at 10 grand, and I still have a student loan for my daughter of 15 grand. So this is all I'm going to be able to be investing this year, is maxing out my Roth. But I mean, $60 a day going in is not too shabby. So that's my plan. I'm going to try to stick with these companies, no guarantees, because if I find something that's even better and I really, really, really want, I probably will sell, but I will not do that without going into their financials and making sure that everything is good and exactly what I want. And I probably won't even do it unless the PE ratio is low and it's a pretty good bargain at this point. But anyway, long story short, that's the current updates, guys, and that's why I did 100 stocks and why I plan on continuing to do 100 stocks in my portfolio and see how it goes. So, yeah, thanks for watching.